welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Brenda O'Connor Juanas, Senior Vice President of Wealth Management at UBS, to discuss some strategies all business owners should be following as it relates to exit planning. Brenda, it's great to have you with us. Welcome to Trade Talks.
Thank you very much for having me, Jill.
You got it. And tell us more about your background and your current role at UBS.
So I'm an advisor at UBS. I've been doing wealth management for my entire career. I've worked in 3 different markets, and I'm currently in Miami. And as my practice has evolved, I've really developed an expertise dealing with founders, entrepreneurs, a lot of tech founders. And frankly, this is the most interesting part of my job because I'm really working with clients that have built businesses or platforms that quite change the way we do things and live and eat, et cetera. Listen, it's been a hard year for founders and business owners. It's been a hard year for tech, and we can talk about how this is going to evolve for 2023.
What are some strategies all business owners should be aware of as it relates to exit planning?
So, Jill, let's talk about what's going on or what the state of the market is for exit planning. Essentially, what we saw last year were interest rates go from 1.5% to up to 4.25% at the peak. And this had a number of implications. Number one, it made financing costs for deals really expensive. So it really did hamper M&A activity. And number two, we saw a lot of volatility last year. Volatility when it came to rates, when it came to Ukraine, inflation, you name it. And that really softened the IPO market. So if you actually look at the numbers in terms of global M&A activity, both in terms of volume and deal size, this came down from 2021 by up to 20 or 50%, I should say. Now, some of these headwinds are going to persist early into 2023, but this doesn't mean that founders and business owners should still be thinking about and planning for an exit, both in terms of their companies, but also in terms of what they are doing personally.
What are the effects of current economic trends on business owners' decision-making and their approach as we head into 2023 with that backdrop?
Okay, so we're in the middle of January 2023 now. And if you're an investor looking at first impression, you should be pretty happy with what you've seen. The economic data that has come out has been positive, particularly on the job numbers front, really looking at that wage growth number. And we saw inflation numbers come out last week. It was 6.5%, lower than the previous month. Now, I don't think investors are going to make the same mistake as they did last year. There were lots of false start rallies. So there's a lot of hesitation and a lot of lack of confidence behind these numbers, which I think is smart. What this does mean for business owners, though, is that you have to ensure that you have a strong balance sheet, pay down those credit facilities as borrowing costs maintain to be expensive, and also stay close to your consumer. It's really important for business owners to understand the dynamics of what's happening in their industries as we head into 2023 here.
Yeah, and you made a great point about paying down debt and getting the balance sheet cleaned up, because really that is the most efficient way to deal with the trends that we're seeing in volatility. And of course, rising interest rates, the Fed has telegraphed its policy, but it does have the latitude to adjust as it needs to.
Yeah, and Jill, there's a disconnect here between what the Fed futures fund or futures market is saying and what the actual Fed is saying. So if you look at the futures market, they're pricing in a peak Fed funds rate in the middle of the year of just under 5%, coming down to 4.2%. But as you said, what's coming out of the Fed in terms of what officials are talking about is rates above 5%. And there's no plans for rate cuts anytime soon. And what that means for business owners is that borrowing costs are going to stay high. So again, pay down those credit facilities. Ensure that you also have a buffer of cash so you can reliably service your interest. That's going to be really important as this year extends out.
And where should business owners take advantage of the investing side in 2023?
Right. So if you are lucky enough to have a buffer of dry powder, I think there could be some really interesting opportunities from opportunistically buying competitors. Now, for general investing, and this is related to investors and business owners, I don't think that we can get too excited out of the gate. The data is still relatively mixed at this point, and frankly, we're still defensively positioned in sectors like healthcare and sectors like consumer staples. Because if you think about it this way, growth is going to decelerate. These sectors will outperform because consumers are just not going to give up or drop medical expenses or consumer staples. So business founders in those particular industries, I think, are going to be advantageously positioned this year.
All right, Brenda, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thanks, Jill.